Okay. Jai Bharat, everyone. I am CA Hiral Prajapati, moderator of this webinar. We are delighted to welcome you in the webinar being organized by the CPE Committee of ICI. It is my great pleasure to be moderator of the webinar on the angel investment and critical analysis of ineligible purchases under the IT Act 1961. In short while, we will start with this webinar. I would like to appraise about UCP committee. The increasing globalization, continuing developments in the field of finance, and frequent changes in the world economic order have posed numerous challenges before the accounting profession worldwide. These challenges have significant implications on the growth and development of our profession and simultaneously have more expectations from the profession. It is indeed the responsibility of the professional bodies to provide members the adequate facilities and opportunities to meet the challenges thrown by the dynamic environment by the continuous enhancing their knowledge, skill, and personal professional values. With this vision, the CP Committee of ICI has been organizing several programs with the help of our program organizing units. We are pleased to inform you that ICI is organizing its first ever Global Professional Accountants Convention, that is GLOPAC, on the theme Connecting the Global, Creating the Value from the November 24th, 26th, 2023 at the Mahatma Mandir Convention Center, Gandhinagar, Gujarat, India. GLOPAC is being celebrated as a mega event to display the important role that the accounting profession has been playing in the building the stronger and more stable economies around the globe. It would provide an opportunity to the global market to network with the best F&D talents in the India.
It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GLOPAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICI to attend and participate in the first ever GLOPAC.
ICI is geared up to welcome delegates from across the globe at the GLOPAC.
What a wonderful event. Don't miss out the opportunities. Today's our program for this evening is as follow. We have two sessions, 1 hour each. Topics are Angel Investment Masterclass, Fake of Bogus Purchase Additions under the IT Act, Critical Analysis based on Judicial Pronouncement. Before we beginning, it is my great pleasure to introduce today's our CCM CA Gyan Chandra Misra sir. CA Gyan Chandra Misra sir is a vice chairman CPE committee and chairman committee on insolvency and bankruptcy of ICI. Presently, he is serving the ICI as a central council member and convener tender monitoring directorate of ICI. He has more than 24 years professional standing to his credit as an established chartered accountant. Under his vision, this year, CP committee taking new initiatives for the members. Sir, welcome you.
Thank you, Hiralji. Good afternoon to one and all. Very respected speaker of today's program, Madam Poonam Khandelwal, and the another speaker, CA Mehul Thakkarji, and of course, very vibrant moderator of today's program, Hiralji, Secretary of the committee, Ajit Nath Tiwari ji in absentia, the chairman, Purushottam Bhai Khandelwal, and all respected participants. Good afternoon to one and all. Friends, we all know that CP committee is accustomed to organize this 2 CPR program on every Wednesday 3 to 5. And in that series, today again, we have assembled here with two very unique topics. One, angel investment, and the other one, paid up bogus purchases under Income Tax Act. With respect to, if I am correct, Ajiji, if I am correct, with respect to the purchases under GST.
IT
Act. IT Act with respect to GST wrong purchases.
Yes. Yes, sir.
Bogus purchase under GST. So it could be in GST also and Income Tax Act also. But as of now, the hot topic is that if there is any bogus purchase under GST and that has been input rate has been disallowed under GST, the treatment are the same under the Income Tax Act. That should also be covered if it is precisely under Income Tax Act only. So friends, these two topics are very important and very concurrence of importance as of now. And I'm sure both the speakers are going to deliberate their best on their given topics. We all know, and well said by Hiralji, that due to globalization and all those things, the knowledge updation is very much required. Unless we have updated ourselves professionally, we will be outdated. So there we have two options, whether to update or to be outdated. So better would be we should update ourselves. We should make ourselves abreast with the knowledge of the concurrence issues and topics. And such seminars are certainly are going to increase the knowledge base of the professionals at large, not only of the big cities, but category 3-4 cities especially, because in the category 3-4 cities, generally the speakers, we people don't get to have physical interaction. But in this webinar, we have seen that the people across the country are joining, and that's why it is most successful as of now. I'll not take much time. I welcome one and all once again from core of my heart on my own behalf, on behalf of committee, and on behalf of the Institute of Chartered Accountants of India. So over to Hiralji for furtherance of the topic. Thank you very much.
Thank you, sir, for your words. Now, for our first session, our eminent speaker is CA Poonam Khandelwal, madam. She will take the angel investor topic. CA Poonam, madam, is a qualified chartered accountant from India. She has started her journey as an educator for finance students and has trained more than 10,000 students. She also actively mentors the startups from India. Madam, welcome you.
Hi, thank you so much. Thank you, Hiralji. Thank you, Gyan sir, and in absentia Purushottamji for giving me an opportunity to interact with young chartered accountants joining in from across the country. As mentioned by Gyan sir, it's a pleasure that I'm joining as a speaker from a tier 2 city, sir. I'm from Nagpur, and it's always a pleasure to interact with the greater audience of the country and my fellow chartered accountants. So the idea of today's topic and why we selected today's topic is very important, just to give a insight about angel investment or startup investments. We all know right now India being the fifth largest economy, and startups are, when it comes to startup ecosystem, we are already at number three, right after USA and China. Our ecosystem is growing manifold. But unfortunately, we do not know how to explore investing in this asset class, which is nothing but a portfolio allocation. So, in this session, what I intend to do and what I intend to cover is probably why one should be looking at it as an asset class, and why, as chartered accountants, we are talking about it. There can be twofold objective. One, that we ourselves are wanting to deploy some money to this asset class, and B, because we are constantly in touch with our clients. They keep asking us what are the new things in the market, because people have been investing in real estate, gold, listed market. But when it comes to startup, the exposure is still less. So as a country, though we are third largest ecosystem in the world, but there are hardly 5-6 thousand angel investors. The reason why we have such less number of angel investors is particularly because of lack of education and lack of exposure. And I'm assuming that a lot of participants who have joined today's session are belonging to tier two, tier three cities also. So the reason why we are not part of the mainstream is because of the lack of exposure of the startup sitting in Bangalore, Delhi, or Mumbai for that matter. And right now, the way Indian ecosystem is evolving, we're seeing a great number of deals coming in from tier two and tier three also. As Modi ji said, even in USA, like in India, every 100 kilometers, the geography, the way of doing business, the languages keep changing. That's how vibrant we as a country are. So we are no more restricted to the top three cities of the country, but we are spread across what we called as Bharat, is an inclusive economy. So to begin with, the point of investing. Why do we invest? Either the reason why we invest is because we want to create, multiply, and sustain our wealth, and we have been investing in all kinds of asset. Our parents would have been invested in gold and real estate heavily, but we as new age people, probably we are looking a lot on the listed market exposure because there's so much to do there. But despite all of this, even if we see at listed market, the exposure of Indian economy is close to 5-6%, not more than that. And thanks to startup companies like Grow and Zerodha, because of which new age investors are also now on click of a button. They are also experimenting, investing in this asset class. So literally anything we are investing in, the idea is to create wealth. Okay. And when I say of creating wealth, obviously we have to analyze the differentiator, which is risk and return. You know, every asset class will have a risk and will have a return. We cannot say that the relationship is direct or inverse. We cannot say that listed market is safe. Listed market also, if we look at large caps, safe investment. But the moment I go for small cap, the risk will be high. At what stage I'm investing? So if I apply the common rules of investments, what are the common rules of investment? That every asset class is tricky. Tricky as in at what stage are you getting into, and with what knowledge are you getting into. So these are few factors if you look at investing. First is the asset class stage. As I told you, if you're investing in a small cap company, there is a multi-bagger opportunity. Wherein if you invest in a large cap company, the returns might be little less as compared to what you are thinking at an early stage. Same applies to land and real estate also. If you are buying a land in a developing area, the prices may be less and the opportunity of multiplier will be high. But in a developed area, probably you will buy it high at a high price and the returns will be low. Then also depends upon the size of the investment, whether at at what price, at what amount of capital you want to invest in a particular asset class, the tenure, whether you're looking at a long term, do you want to be invested as a long term investor or a short term investor. Consistency is something which you all know, and the knowledge and exposure to this asset class. So if I'm talking about investing per se means everything is same. You pick up gold, you pick up anything, knowledge is important. What's happening in America, what's happening with the dollars, what's happening with Indian currency. All of these are so important. What's happening with BRICS right now, with respect to the currency front. So knowledge is very important when you're investing in an asset class. So if we talk of startups, they technically I'm saying that startup is also talking about the same thing. Then why are we talking about it? The reason is startup investment, though are high risk, high return category, why we are looking at it is if you see 2014 till 2022, the growth in the number of funded startups. See, I'm not talking of DPIIT registered startups. See, any person can register themselves as a startup founder. You just go on a DPIIT website, upload your pitch deck, tell a problem statement, give them details, and you will be a registered startup. Correct. But I'm not talking of those startups who are just registered. I'm talking of the companies which are funded. So where in 2014, the funded startups were hardly 1,400, if we look at, you know, in 2022, the number have gone up to 1,400, massive increase. Same applies to incubators. Now, why this is important is because government is supporting this ecosystem big time. Through government scheme like Seed Fund Committee, government is deploying capital to incubators across tier 2 and tier 3 city, thereby promoting entrepreneurship. So wherein we had only 60 incubators, now we are sitting with 650 incubators. Same way where the funding in 2014 was just $5 billion, now we are sitting at a $24 billion. Obviously, you'll be thinking about, I'm sure you're thinking about the funding winter. I'll come to it. I'll speak a little fast because I have time till 4 o'clock. So I would like to cover funding winter also in my slides. So, but if you see 2014 to 2020, there is a considerable increase and number of unicorns also. So if we are going to go by the same pace, and if we continue to add so many number of startups, incubators, the funding coming in from local investor, angel investors, family offices, corporates, then we are on a path to become the second largest Indian startup global ecosystem. Now, if I'm going to be the second largest global startup ecosystem, then it is important that we have a dialogue why we should look at it seriously. There have been times when startups were looked, when I started investing around 2015, I started investing. People used to say this is gamble. This is not there are no, the valuations are tricky. There is no economy. Okay, पहले का 5 crore मिल जाएगा, आगे का कहाँ से लाओगे? There were a lot of questions which were there because ecosystem was not evolved. Then ultimately there was no venture debt. So people used to say ultimately we'll have to go to a banker, So there were a lot of question marks in 2014. But when I talk as on today, we have a robust ecosystem. Why? I'll give you a very simple example. In every political speech, you will hear about startups. No political speech is complete without mentioning startup these days in India. Second, I was listening to one of the speeches by Aap Party. So that guy said we are the youngest political startup of the country. The political parties are positioning themselves as startup because now this is gaining momentum. So it is very important that we have a dialogue around this. And also, as predicted, in another few years, startups are expected to contribute 5% to the GDP. What we intend to become a $5 trillion economy, startups will contribute heavily towards it. So as chartered accountants, we need to know what's happening in this ecosystem. So startups, as we know, are high risk, high return. But why are we talking about it? The reason is if you look at ultra HNI, CXOs, family offices, corporates, they have derived an equation that at least 5% of their overall portfolio they will deploy to startups. Now I'm talking about you and me also. Okay. There is a reason why I'm saying that we should also look at deploying at least 5%. Let's start with 1 or 2%, then we go slowly up to 5%. For family offices, those who are sitting closer to the ecosystem, those who have a setup proper, they're deploying as high as 15% in this asset class. So as individual investors, probably starting with a 5% out of 100 rupees you're investing could be a good thing. Now look at this person. Mr. ABG invested X amount and generated more than 45% IRR over a period of 15 years in his startup journey. And same way, there was an investor who invested, in Bharat Pay, which is a fintech. We are not talking of the corporate governance issues right now here, but yes, this person made close to 80x. So when I'm talking of startup investment, I'm talking my downside is zero, but my upside could be as high as 100, as high as 2000, So upside is something which is beyond my understanding, but when it comes to downside, it is just restricted to zero. So if you talk, you all know that Anupam Mittal has made it public that his IRR in this asset class is this, and same way Mr. Vinay Bansal made a 80x return in Bharat Pay just by investing 5 lakh rupees. That will also come to your mind. Do I need a lot of money to invest in this asset class? The answer is no. In today, the ecosystem is so, in India, the ecosystem is so evolved that you can start your journey with as little as 3 lakh rupees. But the trickiest part about investing in this asset class is where do I find Bharat Pay? Where do I find Paytm? Now it is obviously on IPO. I'm not talking right now. But when it was raising capital, where do I find Zomato? Where do I find Swiggy? Where do I find Ola, Uber? The question is that where do I find? I'm sitting in Rajkot. I'm sitting in Goa. I'm sitting in Nagpur. I'm from Nagpur. You're from Raipur. You're from Gujarat. How do you get access to the great companies is something that we need to derive. We all know, I'm not going to put a lot of time and energy here because we all know that India is a thriving economy in all the talks we are listening. So I'll not put a lot of energy here. Rather, I would like to put energy here, that we think what are startups? Now, startups is something which the founder is deciding I'm a startup company. See, there is no definition of a startup. You can maximum say कि आप कितने साल के हो can define you as a startup. Even if you're selling an ice cream or if you're selling dahi like Ipigami, you are a startup. Even if you want to sell a diaper and you call yourself as a startup, you are a startup. It's about how you're positioning yourself. There is no fixed definition of a startup. So many a times when you're looking at Shark Tank, we get confused how an ice cream seller is a startup. It's the way you're doing your business, it's the way you're acquiring funding, it's the way you're growing, it's the way your business model is asset light. You're white labeling, you're not investing much in your probably factories and all, but you're investing in your manpower, you're investing in marketing, that is how you define it. So now if I look at this, which is very interesting point, that how the various sectors have been shaping up, like from 2014 to 2023, 22. If you see fintech has grown, e-commerce has grown, healthcare has grown. Last one, if you see clean tech investments have grown more over 15 times. They've only 6 deals, now they're 90. Why clean tech? Because obviously we are facing global warming. There are concerns around environmental crisis. So there are a lot of companies, startups coming in clean tech. Even if you look at products these days coming, they try to make it a point that we are our plastic is recyclable, or we are using some material which will not be hazardous to the environment. So there is a lot of awareness around it. Same way, if you see it, fintech, because we being chartered accountants, fintech ecosystem is evolving crazy. Out of 110 unicorns, almost 40% of them come from some fintech angle to it. But this is not it. If you look here, these are other promising sectors in India where disruption is awaited. When I say disruption is awaited, let's start with defense. So, for example, defense is something because the government of India has given a list of almost 1,000 plus items which require indigenization. So, who is going to make these items? Either the big corporates are going to make it or a startup founder is going to make it. The big corporates, why are they not making it? The reason is they are not very agile in nature. Big corporates, they cannot take risk with launching new products. So that's why there comes a big opportunity for startup. If I talk of aviation, if I talk of space, we all know there are two companies in India, Skyroot and Agnikul, which are doing amazing work when it comes to making rockets from India, which can launch satellite. It can become a global company. So aviation, space sector is seeing disruption. If I talk of food processing, the way we have been consuming food, there's so much of change. Food processing is going to see change. Then if I talk of finance, we all know nowadays uh, we are using something called as neobank. Why? Because we want to use technology. We do not want to step into a bank and do certain things. Everything is available. P2P lending is available. But bill discounting is done by various startup founders. So the fintech is seeing a lot of disruption, especially with Paytm and all. There was massive disruption which we've seen, the way, even if I talk of logistics, companies like Shiprocket, companies, these companies have been delivery for that matter. They have disrupted the entire logistic market. So when you're investing in a startup, you should understand that in the beginning they are going to burn capital because they are competing with BTDC. They are competing with Lakme. A sugar cosmetic is competing with Lakme, which has been there for so many number of years. Same way, if I talk of defense, you're probably competing with a listed company. Food, when I talk, probably you're competing with someone as Haldiram, if you're getting into some healthy food habits. So the thing is, in order to capture a certain audience base, in the beginning, startups do burn capital. That is how this industry has been working. But there has been correction to that. But having said that, there is a great disruption which we can see, especially when it comes to EV, auto. EV already startups have disrupted the market, Ather and all you see, Blue Smart in Delhi. So these guys are already disrupting the EV market. So when you're investing in a company, probably look at it, look around. For example, there is a fan company, which has disrupted the fan market, the traditional fan market. There's this company, toothpaste, they're making brushes, Perfora. They are gaining momentum, So how around us we are changing the consumption pattern? So these are almost 24 other promising sectors in India which will see disruption. So startups, no doubt, are emerging asset class. Why should we invest in startup? As I told you, if you the upside could be as high as 80x, 100x, 50x, the downside is zero. So are you willing to take that risk? Having said that, I will like to put here the startup investment is an intellectual asset class. Why? Because unlike listed market where you have a lot of historical data available on click of a button, in startup investments, historical data is missing because probably you're investing in the first year of the journey of the founder or the second year. So there's not much of historical data. You're probably betting a lot of your money or you're investing a lot of your money on the founder, the founder's pedigree, founder's education, founder's probably previous job experience, founder's grit for that matter. Like Ritesh Agrawal, if he comes with a new startup, people are going to invest money in him because he's shown that he could become one of the most celebrated entrepreneurs globally. So we have to understand that how are you investing in it? So I will probably IPOs and all. This is something which I would like to make something a point here that what do you look in a startup? Suppose you have a 10 companies which you're evaluating right now. These are 6 pointers which prima facie you should look at. First is obviously strong and scalable business idea. If a startup founder is operating in a smaller geography and it doesn't have a use case to go, in different other geographies or scale across India, then in that case, it's not a scalable business model. Like Farmeasy had a scalable business model wherein they were able to penetrate not only in tier one, but tier two, tier three also. And same way, if you talk of Ola, Uber, Zomato, Swiggy, they're scalable business model, but try to understand they're using technology as an enabler. The second is market opportunity. Is it a big market opportunity? Are you solving a bigger problem? Because that will define the larger base. Third is the strong team, which is most important. In startup asset class, at least like I have invested in close to 40 odd startups till date. And trust me, all my investment, except for two, three of them, all my investments, I have seen the founder. How good is the founder? What is his background and all? Because you're putting money, you're betting money on a person. Same way, is there a traction? If you're investing in early stage, absolutely at ideation stage, probably there will be no traction and validation. So it's a proper high risk, high return kind of a category. But then if you're coming at a later stage, say at an angel round stage, then probably you will see what traction the startup is having with respect to customer acquisition, feedback, and all those things. Are there any valid partnership? Unit economics. Unit economics are very important because, as I told you, in startup technology is an enabler. So the unit economics has to be higher. That's a different thing that the startups in beginning will be burning capital. But is there a part to better unit economics? And last is scalable asset light model. So it has to be asset light. We are not investing in factories. We're not investing in big equipments. We are not doing that. We're investing in anything which can be scaled very fast. So this is another thing which you can probably take a screenshot also. Stage and risk. What are the various risks that are involved when you're investing in a company? If you're investing in a pre-seed round, which is absolutely at ideation stage probably, so there is a product risk, whether the product will be accepted by the market or not accepted, whether people will buy it or will not buy it, because there's no proof of concept. Then when you come at seed round, the next big thing is team risk. How great is the team? If there's only one founder, is he able to find the second founder? Usually you should invest in companies where there are at least two co-founders, but not like four, five of them, because then in that case it becomes difficult. There can be conflicts. So look at companies where, you have at least two co-founders, one probably coming with a strong tech background. If it's a fintech company, so look at a chartered accountant. If there's CFAs there, if it's a medtech company, look at somebody coming from the medical background. It's very important that your education and the company you're forming becomes a hygiene check, though it can be an exception. But having said that, it's an hygiene check. Then angel round is the business risk, whether the business will survive or not. There will be competition as you scale, because you will be competing with the big guys. Then next scale comes at the execution stage. There are a lot of companies which we see are doing excellently good at local. Like if you are from tier 2, tier 3 city, you would have seen certain startups operating very good within your region. But the moment they enter Bangalore, but the moment they enter Bombay, in that case, probably they're not able to execute with the same level what they executed in their local geography. Then series A will be scaling risk, whether you are able to scale across different geographies, new customer base, new products. And B and C, B would be growth risk, whether you're able to grow, and C is valuation risk. Valuation is a tricky subject which I'll be covering shortly. So how should you strategize investing in startup? Is simple. Early stage should be 80% of your capital, 20% probably you can invest at a later stage if the valuation is higher, maybe 300 or 400 odd crores. Doesn't matter, because at that stage the risk is lower and the returns are lower. But then in that case, because you're making a portfolio, like you make a portfolio in listed market, it's always important that you de-risk your portfolio. Sector, you have to be a sector agnostic investor unless you are in love with fintech, being chartered accountants. But I personally think that if you're an investor, you should look at all kind of sectors. Yeah, there is a possibility that a particular sector you might not understand, like a deep tech startup you will not understand, a biotech company you might not understand. But in that case, it's good to take help of certain sector expert people, whether it's an investable idea or not. Your portfolio size, if you want to come in this asset class, please ensure that you invest at least in 12 to 15 companies. 12 is bare minimum, 15 is very good. If you look at successful angel investors, they usually have a portfolio of 20 odd companies. So it's important that you make a portfolio of 12 to 15 companies. But how much capital it requires? You can start investing as low as 3 lakh rupees. That's the minimum ticket size. Don't invest in, 5,000, 10,000 rupees. That's not how, because 5,000, 10,000 rupees startups are not high quality startup. Usually you should invest where the company is raising, say, 5 crore rupees. There are other tier 1 VCs, there are exceptional mentors on board. Then probably you can also invest 3 lakh rupees in that company, because there is already a validation from sector expert people. There are so many VCs in India which are sector expert VCs. So if you see, suppose in a direct to consumer brand, if you see DSG on cap table, it's a good deal to evaluate, because they have expertise in that. So you have to look at certain cues around it. Then there are certain myths around this asset class. Let's take one by one. The first one is that we already covered this, that startup investments are usually for people from tier 1, especially people sitting in Bangalore, Bombay or Delhi. But trust me, well, it's no more the case today. With minimum of capital, I'm talking 3 lakh rupees per startup, maybe 2 to 3 lakh rupees. And even if you want to make a portfolio of 2, 3 years, within 2, 3 years, you have to deploy 20, 25 lakhs, 25 lakhs, towards this asset class. The good thing is now angel investment has become a SEBI regulated business, wherein there is a angel fund license governed by category 1, wherein, if you want to invest in startups, through an angel fund, then your net worth should be more than 2 crore, excluding the residential property. What I understand, the logic of the law would have been, to allow only probably financially stable people to invest in this asset class, because people who are very are not, financially stable, don't have a net worth, should not be exploring investing in this asset class, because A, it is high risk, high return. Second, the liquidity is not there. You cannot just sell those shares because you're investing in a private limited company. There is no active market for it. There's no active buyer unless a round is happening. So take all these things into consideration. Third is obviously it's a long-term asset class. It's not a short-term asset class. You have to stay invested for 3 to 4 years, and it's not about staying invested. It's also about next round of investment happening. Then only you will get exit if somebody is buying out your shares. So we have to understand that probably invest with a group. Do not go unless you're full time into it. Like I am full time into startup investment. I can probably source the company by myself because I've been in this ecosystem for 6 years. So I can source the companies myself. But when it comes to you, if it is new to you, it is always good to join a group and co-invest with them the little amount, as I mentioned. Wherever you have more conviction in a company, then probably you can hire your stakes. The next myth is that startups are only tech startups. This is absolutely wrong. Startups can be tech as well as non-tech. The only thing is what you should understand is that technology is an enabler. Like if I talk of Epigami, they've used technology to grow across India. If I talk of Weirdo, if I talk of Fasus and all, so all these companies are D2C brands technically, but technology they have used. So startup investments can be tech, non-tech, fintech, edtech. I've already told you defense, EV. There are so many multiple options. Then this another very interesting thing is that the round of the size of the capital you're raising and the round of the name has no correlation. When I say no correlation means where OYO raised $50,000 in its seed round, 10 Club probably raised almost a $40 million in a seed round. It's about the need of the company. If you're like a rocket company, for a rocket company, $10 million is a seed round. But for a fashion company, probably $1 million is a seed round. So it's just the name. So do not confuse between the name of the round and the quantum of the capital. Quantum is purely dependent upon what kind of company you are and what sector you are operating. Then this slide I'll probably put more time here as well, because valuation is something which we keep listening about startup companies. That the companies are highly valued, they are overvalued. Then at early stage, even if the founder is having only 10 lakh revenue, the company is valued at 10 crore. So there are a lot of myths around this. So let me clarify it to you. Skin in the game. So skin in the game of the founder is the most essential thing when an investor is putting money. And I'm talking of serious investors. I'm not talking of investors who just want to eat equity of the founder. Now imagine simply putting it across, from the day a startup is formed till it can go up to IPO, probably takes 7 to 8 years. In 7 to 8 years, the founder will be raising at least 4 rounds of capital, 4 to 5 rounds, depending upon the company. But for ease of calculation, let's put it 4 rounds over a period of 8 years. If in every round he's diluting 15%, then he's already 60% diluted. Then there will be certain ESOPs, say 15% ESOPs. Then he's remaining with only 25% at IPO. Now, put yourself in the shoes of a listed market investor. In listed market, what do you do? The first thing, if I give you a tip, probably buy XYZ share. The first thing you will see as a hygiene check is the promoter's stake. If the promoter's stake is less than 50%, it will raise your eyebrows. If the promoter's stake is more than 70%, it's a go ahead. You will be, very happy because the skin in the game of the promoter is quite high. The same applies to startup founder also. That at an early stage, when the company is hardly valued at 10 crore, if I'm not holding at least 85% of the company, why would I work for my investor? I having 10% stake of a $2 billion company is massive. But I, as a founder, having only 10% stake of a, maybe even $20 million company is not enough. And try to understand valuation is just on paper. The founders are not able to sell this out. It is not saleable. Correct. It's something which a buyer and seller has agreed to it. It's a valuation on paper. It's not necessarily that something the founder can milk it. So stop looking at this asset class. Oh, the founder is having, by doing such less revenue, the company is already valued at 5 billion. It's just valued at 5 billion. It's not like that he's taking that money home. So it's very important that you look at it at early stage. Usually valuation derive karna is very difficult because there are no revenue numbers. So my mathematics is simple. That if a company is coming to me at an early stage, if he's looking for a 1 crore capital, I will give a 10 crore valuation. 10% dilution is maximum. So do it the balancing figure route, how much you want to raise, how much equity ought to be diluted. The balancing figure is valuation, at least at early stage. Obviously, when it comes to late stages, there will be EBITDA, there will be discounted cash flow, and all those methodology which we have learned will come into picture. But early stage, there is no number. So please try to understand whenever you're having a conversation with a startup founder, please do not over bargain with the founder because you are writing a death warrant for the company. Because if you take too much at an early stage, then the next round of investor will not come. Think of listed market here as a point. The next is the mortality rate. Quickly here, we keep talking that the mortality rate in startup is 90%. I beg to differ. The mortality rate in startup is not 90%. It's about your own portfolio. In my portfolio, my mortality rate over a period of 5.5 years now is only 7%. Only 7%. Why? Because I have invested money in right companies. It's about the selection. Like if I'm talking to 500 startups a month and I'm investing only in 10 opportunities, obviously my mortality rate will be reduced to maybe 20%. It will be very less. So when I talk of 90% mortality rate, it is about industry. It is about the industry. Now, the industry is 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 comprised of so many people. They start up from tier four, tier five. Now they're registering a company. They might not be going ahead with it, and so on and so forth. So please try to understand that your selection will decide the mortality rate. If I'm sitting in, for example, I'm sitting in Nagpur and I am only investing in Nagpur startups, my mortality rate will be high because I'm an investor. I should be looking at companies from India. I'm not doing social work. I'm an investor. In listed market, you are evaluating all the companies. You are not evaluating two, three companies, no? You evaluate all the companies and then you put your money. Same in this market also, you should be able to understand that you have to evaluate startups from across India in order to lower your mortality rate. That's why I said it's better to be a part of a probably angel syndicate community, with which you invest because they are doing it full time. They do thorough due diligence, business due diligence, legal due diligence, financial due diligence is so important. Whether you're paying your GST returns, whether you're applying the labor laws are met or not, and all those things. So these all things can de-risk. So please, whenever somebody is saying that the mortality rate is 90%, uh, I do not believe in it. It depends upon your own personal portfolio. Otherwise, even in listed market, you can say that you will not say mortality rate, but you might say I've lost money in 80% of my company. But that doesn't mean the listed market is not great place to invest. It is still the greatest place to invest, correct? Because your selection went wrong. You cannot say that the entire asset class is wrong. Then the myth six is how do you exit? Normally, exits happen if there is a secondary sale, if there is an acquisition, buyback, and IPO. Acquisition is a very important thing wherein the acquisition defines the exit of the investor. Like right now, a lot of corporates, rather unicorn founders, are acquiring companies left, right, center. You won't believe in 2022, as per my source, Indian unicorns themselves acquired 400 startups. So unicorn founders are acquiring, Reliance is acquiring, Tatas are acquiring startup, Marico, Umami, uh, tier two, tier three big companies are acquiring startups. The next is buyback. Obviously, that's one of the case. Need not necessarily be like that. And IPO. IPO, I don't have a lot of data points because we had only few IPOs, probably Zomato, Nykaa, Flipkart, and all. Flipkart is not yet done. Yeah. So delivery. So we have very few IPOs, Paytm, which have gone. But having said that, you might be thinking that there are a lot of IPOs which didn't happen, which was announced, but then, there were certain challenges. Why? Because these startups were operating in an unlisted market. Investors were different. But when moment you go at the IPO level, a listed market, the investor base is massive. So still there is a lot of need for Indian founders to deep dive within themselves, whether you are prepared for IPO or not. And also not all companies are IPOable. Then next is funding winter. Now, this is very important because I want to make you understand something which there is a funding winter which happened in 2022, where we saw 21 May, there were one unicorn born every 1 week. In 23, as we're sitting today, we got our first unicorn in the 8th month. Zepto became a unicorn this week only, I believe, last week. So Zepto became a unicorn. So, and last year also the number of unicorns were very less. So there has been obviously a certain funding winter because of a lot of factors, especially the macro factors. What's happening with USA, the Fed rates, then the Russia-Ukraine war. There are a lot of uncertainties in the global market, because of which there had been certain funding winter. But having said that, again, do not apply it to industry. Apply it to a company, to a startup. There are few companies where the model is still robust, they survive the funding winter. Then there are companies, because their model was not great, they're not able to survive the funding winter. So they entered the market, few companies entered the market during 2021, where the funding was available in plenty. And they thought they will get the next round also easily. But next year, there was a lack of capital in the market, so they were not able to go ahead with what they thought. And there has been few companies which shut down. There were a lot of layoffs and things like that. But having said that, the companies which are coming today, they already know that there was a cycle of funding winter. They need to work on their, not just on their valuation, but they need to work on their profitability. Now, if you see, Zomato is putting a lot of efforts to they became profitable now. Paytm is doing a lot of things. He's bought back his shares, things like that. So rather, if you ask me in listed market also, what do? We invest when the market is low because the valuations are better to come on board, correct? So it's a good time to look at companies right now if you want to come as investor. Why? Because the valuations are corrected. It's a good time to invest. Second, the quality of the founder has further increased because earlier who were coming just like that कि हाँ भाई स्टार्टअप का एक वेव चल रहा है, बढ़िया बजवर्ड है, वो सब अब निकल गया. पहले क्या हो रहा था ना, बिटवीन जिनके 2-3 करोड़ के भी जॉब थे वो भी छोड़ के स्टार्टअप में फटाफट आ जा रहे थे. They were also coming to become a startup founder. But now it's not the case. Now you're thinking 100 times whether I should leave my job or not. So the quality of the founders have also become exception. I must say there is no been better time than invest today. In 2008 also, when the recession came, companies like WhatsApp, Instagram, Zomato, all of them came into picture because with every problem comes a unique solution. So, but the point remains the same, that you should be able to source great companies. I have another 5-10 minutes if I'm not wrong. Purushottam ji? Yeah.
Yes,
Okay.
yes,
Okay.
madam.
Yes, yes. So this is an important part. Probably you can again take a screenshot. People who talk there is a funding winter. Let's look at it. Uh, 2021 and 22. Seed level पे 940 deals happened in 2021 and 917 to 22. So there, though there has been not a great increase, but there is not a decrease. Same with Series A, if you see, 285 deals to 336. The number of companies invested at Series A increase and the average ticket size also increased. Same way in Series B, 90 happened to 156. Again, a very great data point. What was the problem with Series C and D? Series C, if you see 85 ka 56 ho gaya, Series D became 145 to 93. So again, coming back, if you're a good founder, there's no dearth of capital. If you're a good company with good economics, good value, problem solving attitude, good founders, there's no funding winter for you. Look at every startup as an asset class. आप स्टार्टअप को भी हर कंपनी को अपने अपने एसेट क्लास समझो, तो आपको समझ आएगा कि there is, if you're good, there's no funding winter. So how to get started? Probably define your investment thesis, how much you want to deploy, where will you get the deal flow? Deal flow is very important. I'm sitting in Nagpur. How do you know there's a company in Nagpur which is Boeing invested and people were able to put 3 lakh rupees? So there is a company in Ahmedabad. There's a company in Lucknow where Motilal Private Equity invested. There's a company in Silvassa which was acquired by Mensa. How do you get access? So you need to create your deal flow. This industry, unlike listed market, the deal flow is same for all of us. It's the same for all of us. In this market, the deal flow is different for all of us, even for you and me. There is a possibility I missed out on a lot of deals because I was not having access to IIT Delhi alumni. I was not having access to BITS Pilani alumni. So there is a possibility I also miss out on the deals. Create an investment strategies, and this is a very interesting quote by Naval Ravikant, who's the founder of AngelList from USA, an Indian origin person. He has invested more than in 100 companies. You should read his book, Almanac of Naval Ravikant. So he has quoted a very, on his Twitter, he has written, VCs say there are too many angels. Angels say there are too many incubators. Incubators, they say there are too many companies. But the entrepreneurs are still saying there's too little of everything. We're still not there. In a country of 140 crore, I'm just 5,000 angel investors. We need more angel investors in the country. That's how the ecosystem is involved. And I'm not saying to, look at it as giving back to the society. We are not giving back to the society. It's my hard-earned money. I want to make money on it. So idea is, are we talking about it, or are we missing out on the most beautiful asset class available in our country right now as we are growing? Probably this is one thing you can look at, though it can become a little tricky if you put on your LinkedIn, that I want to invest in companies, blah, blah. So what will happen is your entire LinkedIn will be flooded with pitch decks, because as I told you, the number of startup founders are 95,000, close to 1 lakh now. So there is a possibility that your mail will be flooded and you will not get quality deals. But having said that, if you have time and energy, then in that case, you can probably, post it somewhere that you're looking to invest in this asset class and how can you, and probably define your thesis. You want to come in early, you want to mentor the company, you want to help them with their uh, accounts part or legal part or whatever. So this way you can start engaging with the ecosystem. Being chartered accountants, I personally think we should definitely uh, you know, coordinate and be part of this ecosystem. So if we have any, I don't think so we have any questions. I'm open to questions. We have another 4-5 minutes to it. Yeah, so we can take questions. Hirilji. Also, if you want to connect with me, there's a scan code. Do we have any questions?
Yes, thank you, madam.
Hmm.
Any questions?
How do they ask questions?
Ma'am, they are sending the message in our chat box.
Okay. Okay.
Yes, you participants can send the questions in chat box.
Obviously, just sharing 1 hour is this is a big topic, in itself.
No, still, madam,
Uh,
after in your session, many participants increased.
Areva, thank you so much. Good to know. If you
Okay.
need any help, I'm always happy to help. Because I do understand, being myself from a tier two city, how it was so difficult to become part of this ecosystem because it was restricted to the big boys, So, but having said that, it's a very exciting time for India overall. But when it comes to startup ecosystem, I believe we have never been at a better place. So it's a good time to be
Madam,
involved
we
with
have
that.
not felt that you are from Tier 2 or that city. You have spoken superb,
Thank you
excellent
so much.
presentation with
Thank you so
detailed
much.
analysis. Madam, you gave us the idea about the how to invest, why to invest in startup, how can we evaluate startup. You have removed our many myths. You have cleared our many myths. So thank you very much for your session. This is very
Thank you
fruitful
so
for
much.
us.
Thank you so much. Happy to help. Thank you, Purushottam J. Hiral,
Thank
for
yes,
giving this
madam.
opportunity to be part of this session. Yeah.
Now we will let me take the pleasure to introduce now our very vibrant and energetic CCM CA Purushottam Khandelwal sir. He is chairman of CP committee, vice chairman of committee, members in entrepreneurs, public service, and convener of RBA Directorate of ICI. He is having 25 years post-qualification experience in the field of audit, direct and indirect tax, and intellectual property rights. This year, he is devoted to fortifying CPE framework and guaranteeing quality across its entire operational spectrum. And this year, major focus would be on upgrading of CPE portal for enhancement of the branding and professional competency of members. With these words, Purushottam sir, welcome you.
Thank you, dear.
Yes, sir, your remarks.
Yes. Respected faculties, for the first technical session, Poonam Khandelwal ji. Second technical session, Mehul Thakkar ji. Moderator, Hiral Bhai. Secretary of the CPE committee, Ajit Nath ji. And respected participants. It gives immense pleasure to be amongst you. The CPE committee, which is the mother of all the committee. And we are happy to discuss with you that this year we have decided to use a technology in the CPE committee. So my main purpose of my committee is to update member throughout the year. And before this, there was a 3-year rolling period of the completion of CPE in a structured manner. But this time we have decided to complete CPE hour in the one calendar year, because a member is providing consultancy in this year and updated in the next year. It doesn't mean. So first we introduced that you have to complete CPE in the calendar year itself. After introducing in India, the UK has followed same. So they also come with this. They have dispersed away with the 3-year rolling period and come with the first period. My committee is not only organizing this the CPE webinar on the every Wednesday, but on this 17th of this August, we've invited Honorable Finance Minister Nirmala Sitharaman ji at Bhubaneswar. And first time see that the madam was very happy. There is a smile on the face of the madam, and she was extremely happy with the work done by the ICI. इंस्टीट्यूट का एक और है कि वित्तीय ज्ञान ICI का अभियान. So we are trying to reach our वित्तीय ज्ञान to each and every citizen of the India. And we are also working with the government of India, soldiers to soldiers, in many projects. So I will not take much of the time because the Asutosh ji is already, Mehul Thakkar ji has already joined this seminar. So I request Mehul bhai to take the sessions. This is a very important topic of the bogus purchase. So Hiral bhai, request Mehul bhai to take, Hiral take session forward. Thank you so much.
Yes.
Welcome Mehul bhai.
Thank you, sir, for your words, and definitely with your leadership, we will gain a lot and develop our profession very well. Now, now we have second session on the fake bogus purchases under the Income Tax Act 1961. For this, we have with us our eminent speaker, sir, CA Mehul Thakkar, sir. He is very he has vast experience of 25 years as a practicing chartered accountant. He has expertise of direct taxes. He has hands-on experience in providing advisory services, handling assessment, reassessments, etc. He has authored comprehensive books on direct tax law and international taxation. He is also a co-opted member of Direct Tax Committee of Ahmedabad branch of ICI for the year 2019 to 2023. With this word, welcome you, sir.
Thank you, Hiral bhai, for brief introduction. Thank you, our chairman, sir, CA Purushottam Khandelwal ji, our vice chairman, sir, Gyan Chandra ji, and the other office bearers who are assisting in conducting this online seminar on behalf of ICI CPE committee. I've been invited by the committee for a wonderful topic, and the topic is what is the fate of bogus purchase under the Income Tax Act? Because we know that day in, day out, we are finding that lots of GST search and seizure takes place. And in that, it is billers or invoice providers like it is being fierced by the GST department. And this GST department thereafter share the information with the Income Tax department. And the Income Tax department already since many years, they are issuing notices somewhere by a regular assessment, somewhere by a income escaping assessment. So we are going to discuss today what is the fate, that what will happen if we'll face this kind of proceeding under the Income Tax Act. So let me share my screen. I hope screen is visible to everybody.
Yes, sir, it's visible.
Yeah, thank you. Now, just brief introduction I had already given. If you look at that 3 years of GST, already Central GST Authority had tracked the fake invoices amounting to rupees 63,000 crore rupee. And we know in the month of May, they came out with a special all India drive by CGS, Central and State GST Department, from May 16 to July 15 to detect suspicious or fake GST and conduct requisite verification and further remedial action. So this is, we are aware that this drive had already taken place, and we are not aware that exactly how much amount they have tracked it, but that we will definitely get it in soon. Now, once this fake invoice or suspicious GST number registration dealer is cancelled, what GST department does, the GST department share the information with the income tax department. And then we know that income tax department will carry out appropriate proceedings, and they will normally make an addition to the total income, treating all these purchases made from these fake or suspicious billers as bogus. So this is what our experience is. Now, if you look at recent time, various judgments we came across. In certain cases, courts have deleted entire addition. In certain cases, courts have confirmed the addition of entire bogus purchase. And if you look at few other cases where court says that no, entire addition is not a good idea. In that case, some percentage of profit that need to be added. So sometimes we'll find that some percentage of bogus purchase will get added in the hands of taxpayer. So what we are doing is we are going to understand that what are the circumstances wherein the entire addition will sustain, what are the circumstances wherein the addition will be related, and what are the circumstances where there will be an addition to the extent of some percentage of bogus purchase, what department normally claims it. So therefore, I congratulate our committee member and the men that they have wonderfully selected this topic for today evening, that is fate of bogus purchase addition under the Income Tax Act. What I'm going to cover up, I'll try my level best that in a allotted time of 1 hour, I'll cover maximum thing. But this is what my objective for today's deliberation. First and foremost is on whom the onus lie. The primary onus is on whom. So we know that primary onus is always on the SSC to establish that purchase made from the dealer whose registration has been cancelled is genuine. The primary onus is on the SSC, and then how it is going to be discharged, that we'll discuss first. Second discussion would be what is called bogus purchase and what is called substituted purchase. Third point I'm going to deliberate is those judgments where purchases were found to be genuine by the judiciary, and finally the courts relieved the taxpayer from the addition. Then we will address those judgments where purchases were found to be bogus, and therefore court upheld the addition made by the assessing officer. Then we are going to discuss few set of judgments where addition by the judiciary is restricted to some percentage of the profit embedded in allegedly bogus purchases. Then I'm going to cover a very interesting point, and that is applicability of section 69C, where purchases are recorded in books of accounts, but purchases are being made from those dealers whose registrations have been cancelled. And if time will permit, definitely we will discuss penalty regime also. And then we'll summarize the thing that as a tax practitioner, as a tax advisor, as a chartered accountant, while representing our client's case before the lower authority, even before the tribunal, what care should be taken? That all we will understand in the last discussion of key takeaways. So this is the broad idea I have given that how this lecture is organized. So let us look at the first point. Always remember that whenever department claims that your purchase is bogus or department alleges that purchase is bogus, that onus always lie on whom? Taxpayer. Now let us understand that how this onus would be discharged. So before I'll discuss in detail about how to discharge onus, remember that whether transaction of purchase is genuine or not is always a question of fact. It is always a question of fact. Therefore, don't unnecessarily involve the law points in this. There are hardly law points wherever the transaction of purchase is being questioned by the department. Therefore, always it is my advice to all members that they should take care that this is a question of fact, and therefore, whenever these notices are being received, either under regular assessment or by a reassessment proceeding under section 147, our endeavor should be to discharge our onus fully by providing most of the documents which we are going to discuss right now. So it is to be remembered that this is a question of fact, and as I have reiterated, the primary onus is on the taxpayer. Now, how this onus is going to be discharged, let us understand. Then, what is the duty of the taxpayer or the representative on behalf of taxpayer? Is that we should provide followings. Number one, we should provide all details establishing identity of the supplier, like PAN, Aadhaar, if person is an individual. If it is a company or LLP or supplier, then you give the certificate of incorporation, as well as you provide the GST registration number. Second is you have done a transaction of purchase, you must provide the copies of purchase bills. Then you should also provide the documenting evidencing the delivery of goods, that really goods have moved from the supplier to your place. It may be a e-way bill, transportation, delivery chalan, GRN, that you must provide document evidencing that goods have really moved. Very important is you should provide quantity records. You must provide if you are a manufacturer, then accordingly you provide details. If you are a trader, then you provide details of opening stock, purchases made during the year, sales made during the year, any wastage, etc. And then you should provide details of closing stock. That is called quantity records. Then you must provide the copies of bank statement evidencing the fact that payment have been made through banking channel. It is also advisable to provide the confirmation from the seller that the person from whom you have purchased the goods, you must provide the confirmation of account confirmation of that seller. You should also provide the confirmation of broker when you claim that your purchases were made through broker. It is advisable to submit all your GST returns copies, must submit the copy of purchase register, must submit the copy of sales register. At least these set of documents must be submitted during the course of assessment proceeding. Either it's in the form of regular assessment or it may be an income escaping assessment. My request is that this list should be kept in mind and this should be given. I'll discuss the importance of some of the items mentioned in this list when we'll travel to judicial pronouncement. Our next point for discussion is what is called bogus purchase and what is called substituted purchase. When we look at bogus purchase, in that case, those cases in which genuine purchase is not there. Instead, invoices were obtained from the bill providers with a view to inflate purchase figures and the objective is to minimize taxable profit. So this is very common, bogus purchase. This is really a bogus purchase, where I have not made a single rupee purchase, and what I'm doing is I'm just procuring invoice, and the objective is to inflate my purchase cost. That is the immediate objective, and the ultimate objective is by debiting inflated purchase, I'd like to reduce my taxable and business income under the Income Tax Act. This is commonly we find in earlier cases also. Like if you look at, I recollect my article sheet time and thereafter also, that there is something called GP ratio, and GP ratio need to be maintained. That kind of understanding, I do not know, since article sheet we have developed that GP ratio should be maintained, and this understanding we have passed on to the clients as well. So sometimes what clients does before we start audit, they themselves calculate GP from the tally record, and they themselves try to artificially maintain GP. And with a view to maintain this kind of gross profit ratio, they also come out with this kind of bogus adjustments, whereby they are just procuring bills without material and they are debiting to P&L. In these cases, what will happen that they also make payment through banking channel, but the other party will cut his commission and then he will return the cash to the taxpayer. So this is a case of pure bogus purchase. Now, what is called substituted purchase? In case of substituted purchase, items are typically procured from the grey market using cash. That means real purchase had taken place, but not from the person from whom invoice is coming. That means purchase is taking place from X person, while invoice is coming from Y person. Now, these are called substituted purchase for our discussion today. I think you are clear. Bogus purchase is a case of clear-cut reduction in profit, whereby actually there is no purchase. In substituted purchase takes place from a grey market, but invoices are being obtained from the third party. Now let us look at certain judgments of the courts and tribunal where addition made by assessing officer with regard to allegedly bogus purchase was completely deleted. Let us look at the first and foremost a recent Supreme Court judgment of 2019, that is Odeon Builders Private Limited. This is a very interesting case, 110 taxman.com 64. I'm reading, I'll read those judgments, some relevant findings of the court, so that the audience will understand that how owners will be discharged or how owners had not been discharged. We will see those facts also. If you look at para 3 of the Honorable Supreme Court judgment, where Supreme Court upheld the decision rendered by CIT appeal. So this was a case where AO had done an addition of 19 crore 39 lakh 60,000, and CIT appeal had allowed the appeal of SSC. Then matter gradually traveled to ITAT, then it came to High Court, and then finally SSC got favor from High Court, but department was not satisfied, and therefore you can see the Commissioner of Income Tax referred an appeal before Supreme Court. What Supreme Court says that we, in para 3, Supreme Court says we allow the appeal because we look at the CIT appeal's finding. I'm reading the CIT appeal's finding. Entire disallowance in this case is based on third-party information gathered by the investigation department. So your case was because of third-party information, and this information was not independently verified by the AO. Not only that, AO had not provided copy of statements to the appellant, and therefore AO denied the opportunity of cross-examination to the appellant. And on the other end, if you look at appellant discharge initial burden substantiating purchases through various documentation like purchase bill, transport bill, confirmation, account pay check, VAT registrations, sellers VAT registration, sellers income tax return. And therefore, CIT appeal says, in totality, purchases made by the appellant from this Padmet Realtor Private Limited is found to be acceptable, and this allowance is deleted. So this was the finding of CIT appeal, and this finding was upheld by Supreme Court. So Supreme Court had noted this paragraph in paragraph 3 of CIT appeal. So you can see here that SSC had discharged his initial burden. That is the finding of the CIT appeal. I am making it red. SSC prima facie discharge initial burden by producing all documentary evidences. And second part, what happened in this case, that this reopening was done based on third party information, but third party information was not shared by the AO to the taxpayer. Not only that, third party information AO had not independently verified, and AO also not given the opportunity of cross examination. Therefore, looking to overall facts, Supreme Court says that CIT appeal has rendered a perfect finding that in this case addition shall not be made. Let us look at another judgment of Supreme Court in case of Century Plyboard India Limited, 103taxman.com 179. This was a matter pertaining to section 263. Here the assessment was done accepting the purchases made by the taxpayer, but commissioner was not satisfied, and under review proceedings, commissioner picked up the case and he set aside the AO's order directing him to make assessment afresh. Matter was challenged before the tribunal. Tribunal said that commissioner is wrong in picking this case under section 263. Department was not satisfied with the tribunal's order. Matter was travelled to High Court and Supreme Court. Supreme Court confirmed the finding of High Court. What Supreme Court noted in para 7, since in this case, appellant looked into the documents that were furnished by the SSC in response to show cause under section 260 of the Act, and tribunal found on facts that perceived bogus transactions were genuine, and therefore we do not want to interfere tribunal order cancelling the 263 proceedings. So here also you can see that Supreme Court noted that tribunal had found that all documents are on record and document shows that this transaction is not bogus, but it is what? Genuine. If initial burden is properly discharged, then we can get this benefit. Look at Mumbai High Court. Very interesting case of Vaman International Private Limited, 2020, 422 ITR 520. This was a case where, if you look at, SSC fled copies of purchase bills, then invoices, then stock ledger, that is stock quantity ledger, bank statements that payment has been made through banking channel to establish genuine of the purchase. That means here SSC discharges initial order. Thereafter, tribunal held that, now this is very important, AO could not bring on record any evidence to show that purchases were bogus. Only reliance placed by AO was that he has got some information from sales tax department and he has got statements of two persons recorded by sales tax department. The tribunal noted that this would not be sufficient. You can see this would not be sufficient to treat purchases bogus so as to make addition under section 69C of the Act. Tribunal held that if AO had doubted the genuineness of purchases, it was the incumbent upon AO to cause further inquiry to ascertain the genuineness or otherwise of the transaction and to have given the opportunity of the cross-examination to the SSC to those parties who had rendered statement before the sales tax department. AO had not done any such job. So without causing such further inquiry by AO, it is not open for AO to make addition under section 69C. So here you can also understand that here SSC had discharged his initial burden, and AO simply relied on the Statistics Department's two-party statement recorded. And here also AO had not done independent inquiry, and AO had not confronted the statement to the appellant for cross verification. So these three judgments we have seen. I'll share the presentation. I request. Let us look at the one more judgment, Bombay High Court. This is another interesting matter before the Bombay High Court in case of Nikunj Exim Enterprise Private Limited. In this case, Nikunj Exim, Mumbai High Court noted this very interesting finding. Merely because supplier have not appeared before the O or before the Commission of Appeal, one cannot conclude that purchases were not made by the SSC. As well as CITPL disallowed 1.33 crore on account of purchases merely on basis of suspicion because sellers and brokers have not been produced before them. So here SSC discharges his entire burden, and now only AO had raised, you can see the wording used is suspicion. The addition cannot be based on suspicion. That is what Bombay High Court says. Because if SSC had discharged his burden and simply third party does not appear before the O, that doesn't mean that purchase is bogus. Then I have supplied all the necessary document to establish that my purchase is genuine. Even we have got Gujarat High Court in case of Adinath Industry 252 ITR 476. In this case, Gujarat High Court had noted it is very much surprising that AO had drawn a suspicion and presumption that amount has come back in the SSC's hand. That means AO here says that SSC had done a bogus purchase, he had given account pay check, and the other party had given amount back. That presumption has been drawn by OS, that cash has come back. Court says this presumption is without any evidence whatsoever, and it is merely on the basis of statement of supplier, bank statement of supplier, because supplier had done a cash withdrawal. Gujarat High Court says, according to our opinion, it goes without saying that it was within the knowledge of banker that who is the account holder, whom withdraw the amount. Then it is the duty of the AO that he could have honored this fact of Gita Industry that this is a bogus party, and for that he would have approached bank manager, he would have recorded statement of bank manager or an accountant or a cashier or a person who introduced Gita Industry. At least AO would have established this party is a bogus party. So AO had not established anything. AO simply said that I have got a statement of bank statement of Gita Industry, and looking to bank statement of Gita Industry, immediate cash withdrawal is there. Therefore, I have a presumption that this cash has been given back to the taxpayer. Then court says that addition would not work on presumption basis. AO has to establish that this is in fact money had withdrawn and money had been given to taxpayer, at least by recording the statement of Gita Industry or bank manager, etc., etc. I hope we understood wonderfully that if supplier does not appear, will not make any difference. If cash withdrawal is done immediately, that will also not make any difference, provided number one, that we have discharged our initial bonus, and second is AO had not conducted further inquiry. Now let us look at another set of judgment where addition made by the AO was confirmed at a higher forum. So let us look at NK Industries Limited. This was a matter before Gujarat High Court in 2016. In this case, I'm just going to share facts in brief. I request participant to pay attention on the screen. Here, AO recorded statement of suppliers of NK Industry, and suppliers categorically denied having supplied material. That means they admitted that we have not supplied material at all. Not only that, they admitted that signed bill book, signed bank checkbook, application for registration in the name of supplier was done at the instance of Mr. Nilesh Patel, who is nothing but a director of this NK Industry. And they also admitted that for this work, we have been paid 2,000 per month service charge. That means they admitted fully that we are just a name lender. You also observed in the bank statement that after deposit of check, there was an immediate withdrawal on the same day. Now see, despite this, tribunal made a finding. What tribunal made a finding? That these persons are merely name lenders and billing agents, and these are the fictitious invoices. Despite this finding, tribunal made addition only up to 25% of 0.92 crore. Therefore, department was not happy. Department says that there is a clear-cut fact which emanates that there is no supply at all. And therefore, this is not a case of substituted purchase. It is a case of clear-cut bogus purchase. And therefore, matter was travelled. There was a cross appeal before the Gujarat High Court. And Gujarat High Court says that we do not agree with the tribunal's finding. Gujarat High Court says that tribunal has once categorically observed that purchases are bogus, then taxing only 25% of this bogus purchase goes against the principle of provisions of Income Tax Act. Gujarat High Court says in this case, addition should be made fully and not 25%. Against this Gujarat High Court judgment, SLP was filed by the SSC before Honorable Supreme Court, but that was dismissed by the Supreme Court, 84taxman.com, 195. I think you are getting now difference in earlier set of case and this set of case. That here clearly there is a bogus purchase. Look at the another judgment of Narendra Kumar Gupta, Punjab and Haryana High Court. In this case, the scenario was there was a variation in the name of party on the voucher and corresponding bill. There was a variation in even description of purchase. There is a variation in rate of same item of purchase. There was no sales tax registration. There was no registration of GP, Pollution Control Board. Even notices were issued under Section 136, but these notices were remain undelivered. A report from inspector was obtained because notices remain undelivered. The inspector was deputed to verify whether supplier exists or not. And inspector also concluded that supplier did not exist at any point of time at the addresses mentioned in the bill. Then Punjab and High Court says that in this case you can see this is department went to High Court. Why? Because tribunal allowed the appeal. Tribunal says that addition should be deleted. Department says this is a fact that nobody existed there. There is a variation in rate of purchase. There is a variation in description of purchase. There is no registration of sales tax. So looking to this fact, this is a case of bogus purchase. So what Punjab and Haryana High Court says, the tribunal has not dealt with these aspects, nor it has chosen to record any opinion on the failure of SSC to produce the party or to prove their existence, or at least to rebut the report prepared by the inspector, but abruptly directed AO to apply percentage of 6% of purchase without assigning any ostensible reason. And therefore, court said that tribunal has having ignored the relevant fact. In our opinion, tribunal has committed an error of jurisdiction. So this is a very interesting case. In this case, what happened? We understood. What court says that once department comes with a claim that party does not exist, then now onus is shifted again to whom? Taxpayer. So you understand onus keep on shifting. First SSC had given some documents, therefore onus is now on whom? AO. Now AO said that these purchases are from a party which do not exist and we have deputy inspector and this is the report. So now again onus is shifted to whom? SSC. And court noted, what court noted? That SSC had not discharged these owners and therefore tribunal is wrong in restricting addition up to only 6% of these purchases. Look at very another interesting judgment of Ganesh Rice Mill. I think I request participants to read on their own. Let me take it. This La Medica is very famous case. La Medica, 117 taxman 628. In this La Medica's case, what happened? That there was a purchase worth rupee raw material of 3,82,750 from Kalpana Enterprise. Now, these were the only purchases from Kalpana Enterprise during the year. ITO requested SSC to produce the party. Summons were also issued under 131 to the party, but summons came back with a remark that address is not found. And therefore, ITO Deputy Inspector, he also submitted a report that there is no tenant name called Kalpana Enterprise, and neighborhood said that we have never heard of this kind of name in our neighborhood. Summons were issued to banker, and banker had given a report that account was operated by Mr. Chedilal, who had immediately withdrawn the amount once 3,82,000 was deposited. And Chedilal was introduced to bank by Mr. Satyapal Jain, who is a partner of Medipac, and Medipac is one of the sister concern of La Medica. And it was also found that Chedilal was just an employee of Medipac, and therefore ITO summoned to produce Chedilal as well as Mr. Satyapal Jain. But SSC said that we cannot now trace Chedilal, he is not with us, and Mr. Jain is right now not available. Despite the above facts, tribunal said that purchases are not doubtful. Try to understand. Tribunal said that these are the facts. Still, tribunal said that we don't doubt the purchase is genuine. High Court was not happy, and High Court had given this finding. High Court says that once it is accepted that supplies were not made by Kalpana Enterprise to whom payments were made, the question whether purchase from some other source ought not to have weighed with the tribunal as a factor in favor of SSC. The conclusion of the tribunal are therefore clearly erroneous, contrary to the material on record, and it is without taking into consideration relevant material and placing reliance on irrelevant material. So here what happened? SSC argued before tribunal that my sale is accepted. What is accepted? My sale is accepted, then but obvious my sale cannot be without purchase, and therefore my purchase would be from some other person. But court noted that this was not the stand of the taxpayer at any stage. You can see the bold part, this is very important. It is to be noted that SSC's stand was not that it had effected purchase from anybody else. Its stand throughout the argument was that they have made purchase from whom? Kalpana Enterprise. And therefore, it is not appropriate for the tribunal to come out with a third case, where SSC's case was not that to hold that transactions were real and not fictitious, as claimed by the claimant. So this is very, very important. In this case, court said that SSC since beginning is claiming that I have made purchase from whom? Kalpana Enterprise only. And it is not a case that he had made purchase from grey market. Therefore, it is not right for tribunal to allow these purchases. Here also entire edition was confirmed. This La Medica was distinguished in a Delhi ITT, Sudha Loyenka, 2018, and it was also first distinguished before Delhi High Court also in case of Hilux Automotive. I'll come to this at the end. When I summarize, I'll discuss La Medica again and how it was distinguished before the Delhi High Court and subsequently recently for Delhi Tribunal. I have given also a couple of few or more judgments there one can refer where addition towards bogus purchase was confirmed by High Court. Let us look at one more fact where addition was restricted to the amount of profit embedded in allegedly bogus purchases. Few cases, there are many cases coming from Bombay High Court and Gujarat High Court. I have picked up recent, they are from Mumbai High Court. I have also given media citations of Gujarat High Court, which was the foundation for all these judgments. Let us look at Vishwasakti Construction, 151taxman.com, Mumbai High Court. In this case, what happened? The appellant was a contractor and he had been a subcontract for carrying out civil work of road and building, road repair and building repair. And for this purpose, he had purchased building material from 10 suppliers. But AO said that these 10 suppliers are providing accommodation entries. Our court noted that work allotted to this person as a subcontractor, he had completed work. Now this road repairing work, building repairing work, this cannot be completed unless some purchase has been made. Therefore, court noted that which would have been otherwise impossible. Purchase would have been there. And therefore, court says that entire purchase made by appellant cannot be taken as non-genuine. Instead, what tribunal said that let us restrict some percentage of this purchase. That decision is a proper decision. There is no point in disallowing the entire purchase. So here it is a case what High Court observed. High Court observed that SSC had completed the work and work completed by the SSC has not been denied. If work is completed, that means road repairing, building repairing cannot be possible, repairing cannot be possible without material. And therefore, court says that we agree with the tribunal that the entire purchase cannot be taken as non-genuine in this case. Another is also on the same line of case of Ram Builder. In this case, SSC submitted consumption report. Secondly, SSC submitted completion certificate with regard to contract work done by Ram Builders. And this consumption report and completion certificate had been accepted by AO. And therefore, court said that it could not be said that purchases were totally bogus. And therefore, we uphold the addition at 59 lakh, which is based on estimation at the rate of 12.5% of total purchases in question. Here, court says that we agree with the tribunal because there is a consumption report produced by the SSC. Secondly, completion certificate is also given, you can see. And therefore, definitely work has been done and without material work cannot be done. Therefore, this is not a case of bogus purchase. It is a case of substituted purchase. And therefore, we agree with the tribunal that addition shall be restricted up to 12.5% of this. Then comes another Bombay High Court. In this case, Nitin Lohia. The Bombay High Court noted that CIT appeal allowed appeal ground that AO had not SSC to complete the transaction by a sale, unless it could be shown from the record that corresponding sale is also a same transaction. And therefore, Bombay High Court says that this is actually a reasoning before Gujarat High Court. Bombay High Court says that if sale is accepted, then there is bound to be a purchase. Therefore, in that event, there is no point in making disallowance of any entire purchase. And therefore, Bombay High Court says we are in agreement with the view expressed by CIT appeal. And finally, we have got one more Mumbai tribunal, which I'd like to share slightly in detail. Why? Because why percentage addition is being made? There is a question sometimes by the participant that why purchases, some percentage of purchase are being added. So here, Mumbai Tribunal had given a reasoning. Mumbai Tribunal says that the facts indicate that SSC had made purchase from the grey market. Making purchases through grey market gives SSC some saving on account of non-payment of tax and others at the expense of the exchequer. In such a situation, in our opinion, 12.5% disallowance out of bogus purchase meets the ends of justice. So why some percentage addition? Tribunal says that when grey market purchase takes place, SSC will save in terms of taxes. And earlier we know that we have got octroi, etc. The SSC will also save local taxes. And therefore, looking to that, this profit SSC has earned, that profit should be at least brought to the tax. And that's why we add some percentage. This is the reason that they go for some percentage addition. Now we have got Gujarat High Court, Smith P. Sheth, very interesting judgment, para number 5, where Gujarat High Court in para 7 had given a wonderful finding. CIT believed that when as a trader in steel, SSC sold certain quantity of steel, definitely you would have purchased same quantity of steel from some source. When total sale is accepted by you, he could not have questioned the very basis of purchase. And therefore, CIT appeal believed SSC's theory that purchases were not bogus, but were made from the parties other than those mentioned in the books of accounts. If that being the position, not the entire purchase price, but only a profit element embedded in such purchases can be added to total income, and so much is clear by the decision of this court. I think you are getting clarity that here addition is restricted only some percentage of profit. We have got Gujarat High Court, Bholinath Polyfair, we have got Vijay Trading, Gujarat High Court, Jagdish Patel, Gujarat High Court, Prem Kumar, Gujarat High Court. These are the foundational judgments one can read in detail, given the citations as well. Now coming to a very important aspect, if matter is under section 69C, addition is under section 69C, I'll say that chances of winning this matter is very, very high. It depends on how argument is being made. Because I have seen many of the cases section 69C was invoked, but proper argument has not been done by counsel before the tribunal or even before the High Court or Supreme Court. I'll discuss two very foundation judgment on this, and I request that whenever 69C takes place, at least before tribunal, before ITAT, you should take these 10 which I am going to deliberate right now. First of all, before I'll discuss two judgments, let us look at section 69C. Section 69C says, where in the financial year, SSC has incurred any expenditure and he does not offer any explanation about the source of expenditure or explanation offered by him in the office of assessing officer is not satisfactory, then amount involved by the such expenditure will be deemed to be the income of the SSC for that financial year. We understand and we know section 69C, it is talking about that you are not able to explain the source of expenditure. I repeat, section 69C is focusing on source. Section 69C nowhere focus on genuineness of purchase. I repeat, it focus on source of purchase. If source of purchase you do not offer explanation or explanation offered by you is not found to be satisfactory, in that event, you will invoke with section 69C. It is not a case of where purchases are bogus. Here the case of purchases are being made, but source SSC failed to explain. Matter was picked up before Delhi High Court. One can see Radhika Creation, 2011, 10taxman.com 138, where Delhi High Court had noted in its finding here the focus of 69C is the source of expenditure and not on the authenticity of the expenditure itself. It is admitted position that expenditure was shown by SSC in its regular books. If expenditure recorded in regular books, then definitely source is automatically explained. And therefore, Delhi High Court upheld the reasoning given by Delhi Tribunal. What reasoning given? That here expenditure was accounted in regular books, and therefore Tribunal says source is obviously explained. And therefore, in this case, Section 69C is not applicable because this is not a case of unaccounted expenditure. So 69C will come into picture only when it is an unaccounted expenditure. If it is accounted, then matter is over. Source is automatically explained. So this is a wonderful judgment. You can find another judgment of Sajni Jewels, Gujarat High Court. This judgment was rendered in the case of matter was challenged before Gujarat High Court under section reopening was challenged before Gujarat High Court under section 147, where one of the reason for recording by AO was that there was a purchase which is ingenuine, and therefore I would like to apply section 69C. What Gujarat High Court noted very interestingly, Gujarat High Court says that present case is not a case where SSC has incurred expenditure but failed to offer explanation about the source of such expenditure. The court says it is not a case where SSC has incurred expenditure and he failed. Here SSC had fully explained the source, and court noted source of expenditure in question was very much available since in the reason record itself, where AO himself mentioned in the reason recorded for reopening that purchase is made by the SSC by which check? Account pay check. When court says if it is made by account pay check, source is automatically explained. AO himself admit that source is account pay check. And therefore, court noted that if it is recorded in books, then section 69C has no applicability. So this is very, very important that one can see. Now I am summarizing the part. Penalty regime, just I'll give a brief overview. If AO makes an addition under section 68, 69, 69A, B, C, then he will invoke section 271 AAC, where he will make an addition of 10% of tax payable under 115BB. We all are aware that in this case, penalties, 115BB tax rate applicable is how much? 60%. And therefore penalty would be 10% of such 60%, that will be 6%. But if addition takes place other than other than 68, 69, then penalty would be under section 270A, wherein your penalty amount would be depending upon whether it is a simple underreporting or is it a case of misreporting falling under section 270A9. Then accordingly, penalty would be 50% of tax on underreported, or it may go up to 200% of tax on underreported income. We have got one more penalty. I request the chairman and the vice chairman of the CP committee to separate session on 271 AD. I had been invited in a national conference. I recollect, I think myself and Kapil Goyal was also a co-speaker. In 271 AD, I had taken almost 1 hour, 1.5 hours. I request the committee, I'll not deliberate much in detail, but we know that 271 AD is independent of assessment. And this penalty is entire transaction amount of bogus purchase, provided false entry is found in books of account or there is an omission of entry, and that omission has a bearing on computational total income, and then omission was done with a view to evade tax liability. If that was the case, then 271 AD would be levied. And remember, it is independent and in addition to 270A and in addition to 271 AAC. So this is an additional penalty which was introduced by Finance Act 2020. I'm not going to deliberate much on that. I'll come to key takeaway, which is very, very important. And then in key takeaway, I will distinguish La Medica. Already I have said that this is a case of question of fact, and therefore our job is that we should establish by documentary evidences that purchase is genuine. And therefore, what we should do it whenever we find this kind of notices, at least before lower authority. When I say lower authority means before AO and CIT appeal, at least this should be done. Number one, endeavor should be made to furnish all documents outlined in para 3 of this document I have discussed, establishing authenticity of the purchases made by the SSC. You must request, I have seen our chartered accountants are very submissive. They just do as directed. That means what AO demands, they simply provide it. Don't be aggressive. When AO says your purchase is bogus, be aggressive. AO says this is the statement, then okay, you ask for a copy of that document and statement on which AO relied. You ask for a copy of the statement recorded. You ask for the documents and material read by the AO, investigation wing documents. You ask for the copy of statement recorded, and then read them minutely and submit your detailed response and your counter arguments and your observations on these documents and materials supplied by the O and statement of third party which has been made available to you. Then must ask for the cross examination. I have seen that we fail to seek cross examination. At least seek cross examination before the lower authorities, at least before an AO and CIT appeal. If you are not taken, ask for a cross examination before AO or CIT appeal, then case would become difficult before the tribunal. Therefore, I request the participant at least cross examination of third party on whose statement AO would like to rely, must seek that before the AO or at least before the CIT appeal if you fail to before the AO. And very important, you should give these documents. You give those documents which evidence the movement of goods. You provide quantity details so that you can argue that my sales is accepted, purchase is bound to be there. You provide history of GP, establishing that there is no variation in GP. Therefore, even there is no need even to make GP addition. You give working of GP, assuming that if entire purchase is added, then my GP is unreasonably high, which is not comparable with whom? Industry GP, and therefore this addition is not warranted. And last is very important. You should show the rate of purchase which is allegedly bogus and rate of purchase which AO has accepted. You compare the rate and you request the higher authority that you reduce my addition. You see, my purchase is almost of similar rate. Therefore, there is no addition or my GP rate addition should be very minimal. So this is what as a representative chartered accountant, we should do it before the lower authority. So I think I am done with my session. Any participant would have any question, then we can entertain for 5 minutes. I got next meeting, I need to somewhere reach within 20 minutes. Oh, I'm sorry, I failed to distinguish that La Medica. Oh, very, very, very important. I'm sorry, let me think. La Medica is itself is a query would be resolved. Let me first of all, yes, in La Medica, what happened? Why entire edition was confirmed by the court? I'm reading that paragraph again. In La Medica, there were very important thing is we have found that it was a clear-cut case of bogus purchase. Chedilal was not before the person. Inspector Deputed says this kind of Kalpana enterprise do not exist. And what court noted, very important again, I am highlighting, court noted in La Medica that it is not a case that he had made a purchase from anybody else. Throughout Euro 2 tribunal, SSC's stand was that he made purchase from Kalpana Enterprise only. The court says it is not a case that he said I have made a purchase from third party. And therefore, Delhi High Court had distinguished this in Hilux Automotive 2009, which was followed by the late tribunal recently. Court said para 12 of Delhi High Court, where it is distinguished. So far as La Medica's case is concerned, even a cursory reading thereof reveals that parties to whom the payments were allegedly made were found to be fictitious. The party itself was bogus, and there was a clear-cut finding that purchases were fictitious, and therefore court concluded that merely because some purchases were shown to have been would not otherwise a substantial consideration, namely involvement of small person who have given fictitious address. It is not a position in the instant case, and Mumbai Tribunal also said that in La Medica, it was not a case SSC at any stage prior to High Court taken a plea that if sale is accepted, then purchase must have been made. So this argument was not made at a lower forum, and that's why High Court was not happy. High Court says that these arguments should be at before lower authority, that I have made a purchase from grey market. Now you are telling before High Court, then we will not agree. And that's why La Medica did not agree. And tribunal therefore said that La Medica would be applied only in those cases where SSC's stand is that my purchase is from Kalpana Enterprise. That means his own supplier. I think all are clear on this La Medica, how to distinguish. Any query, I think in chat box, there are no questions coming. If chairman and committee member permits, then we conclude officially by giving a remark.
Yes, sir.
Anybody who can share the concluding remark? Before
Yes,
that,
sir.
I'll be thankful to committee for providing me this opportunity often and on and often to share my views. Thank you.
Sir, your session was so much informative. We gained a lot from your session. Thank you very much, sir. I would like
Thank you,
to
Hiral bhai.
thank, yes, sir. I would like to thank our committee chairman, CA Purushottam sir, our vice chairman, CA Gyan Chandra Mishra sir, organizing committee members, and of course, last but not least, our participants for making our webinar very successful. Thank you, everyone. Thank you. Yes.